Hi, afternoon. Welcome to ED Now. Wanted to get a sense of what you're making of the market right now, given the global construct, not just the Fed rate cut, but the measures from China as well earlier this morning. And now our stint with 26K and then straight away an 80-point fall from there.
Yeah, good afternoon, Aisha. No, I mean, come on, like the way markets have gone up, 80, 100 points move is just a blip, really. I think, these days when I talk to clients and when I invest money, I tell them upfront that, 10 to 15% correction from here should not bother you. And if it does, then wait before you get into the markets because, the last 3 or 4 months, I think since April, the markets have run up quite aggressively. I think we were trading at a multiple of around 22 that time. Now we're trading at a trailing multiple of 24. And this is after, 4 years back, we changed how we calculate the price earnings from standalone to consolidated. If you look at it that way and you had to compare a historic number for the price earnings multiple, then this should be 25% higher. So it should be something like 28 trailing multiple. So we are very expensive. The markets are very, very expensive. But on the other side, if I look at what clients are doing, what fund houses are doing, there is so much cash with the mutual fund houses, 5 to 6% cash everyone's holding across all the dynamic funds and balanced advantage funds and a lot of these asset allocation funds. Everyone's reduced their equity holding by 20%. They're holding debt and arbitrage and cash. So with so much money waiting to get invested, I doubt if there could be a sharp correction anytime soon. Yes, maybe if there is a black swan event in future, markets will fall. But right now, there is enough cushion to absorb any fall. So I am looking to invest into, one large cap stocks which are, available at reasonable valuations. I can talk about the ones that I'm investing with a disclaimer that I've already invested and recommended these stocks. And two, I'm trying to come out of a lot of the mid caps stocks because that's where, and that's irrespective of the sector. Be it, pharma is one of the sectors I really like, but mid cap pharma is somehow really expensive. I think again, mutual funds buying into mid cap theme and mid cap stories, that's where most money is flowing into. So that's where, irrespective of the sector, irrespective of the segment of the market, that's where a lot of fraud is. So stick to large caps, stick to stocks where you still see value. Be prepared to take a 10-15% dip because, even if it happens, it's going to bounce back really sharply. That's my sense.
Get a color on where is it that you're finding value, Rajat? You just talked about as to how you are investing in large caps with the cash that you're sitting on.
Yeah, so just like a lot of fund houses, we also get incremental cash coming in, which we have to invest. And I really like consumption as a theme, but then the moment you say consumption, it sort of covers everything. Banking could be consumption, telecom could be consumption. I am talking about consumption, mostly FMCG, fast moving consumer goods, things which are available 100, 200, 300, where, which are even available in rural economy. There's a lot of NFOs lined up on the rural theme in the next 2 months as well. So, stocks which I've already recommended on your show about 3, 4 months back, Hindustan Unilever, and actually, interestingly, a lot of the stocks which are not doing well in trade today. So Hindustan Unilever, I find that available at a fairly decent valuation. ITC is a stock that I really like, and Britannia, Dabur, a lot of these FMCG names. That's where I see a lot of value. And the other thing is, now I remember about 4, 5 years ago, I've had these interviews with you where I said, I find private banking to be really expensive. Banking is anyways not something I like, but right now where these banks are available, they make a very compelling case to buy, particularly Axis Bank and HDFC Bank. And the reason why I'm not counting ICICI Bank is because of the merger of ICICI Securities with ICICI Bank. There was a lot of buying in that stock, so that's sort of trading a little expensive. But you see HDFC Bank, it used to trade at a price to earnings multiple of 28 around 5, 6 years back. Today it's trading at a multiple of 18. I do get what the problem is, that there's a skewed advanced deposit ratio, and not many people are putting money in the banks. That's because a lot of money was going into mutual funds and a lot of these other instruments that came about. But now with the government doing away with the tax benefit for debt funds, which was primarily sold as an alternative to bank FDs, I think a lot of that money will start flowing back into the banking system. And it could take a while, it could take a few quarters. Maybe when the market cools off, more money will flow into the banks. But right now, where they're available, HDFC, as I was saying, used to trade at a multiple of 28. Today, it's available at a price to earnings of 18. It's almost like, about 40-45% cheaper. Same with Axis Bank. And, those are two banks which we've added, we've recommended. So largely sticking to large cap space, private banking is what I like, and consumption, as I said, to be specific, FMCG is what I like. That's where we've made some buying. And I've come out of a lot of stocks. I should mention this. I've recommended some of these on your show. Gulf Oil, Manorama Industries. I like all these businesses. There's nothing wrong, but they have gone up 4x, 5x. So we've sold some stocks there.
Interesting. And what within FMCG? Is it largely tilted towards the ones with a larger rural exposure, Rajat?
No, exactly the stocks that I mentioned. ITC, Hindustan Unilever, Nestle. The other stock that I bought is in paints, Asian Paints. Now, I remember Asian Paints used to trade at a multiple of about 100, which is when everybody wanted to buy it a few years back. Today also, it's expensive. It's trading at a multiple of about 60. But right now, I don't find it as expensive as it used to be. Although I will say, whoever is buying in these sectors or any sectors should actually stagger their investments, specifically where we are right now. We're towards the end of September, and where the markets are right now, I've seen the results get factored into stock prices before the results. The same thing happened at the end of the June quarter, and now we're in September. 2 weeks from now, we'll start getting earnings of the second quarter. And as I said, multiples have moved up higher. So maybe the markets are expecting a very, very good quarter as far as corporate earnings are concerned. So stagger your investments, invest over the next 3 months. Make a rule to invest 10% of what you have to invest every week. Maybe that'll work.
Naresh, let me pick up on a few of those stocks. ITC, HDFC Bank, Kotak Bank. Is that where you're seeing strength for the next few months?
So the strength is clearly there. It's just that the momentum has been slow in the FMCG names. ITC is very close to a new all-time high. But it's been a very slow move around that 500, 520 mark, but the trend is still up. HDFC Bank is interesting because this is like maybe the 8th or the 10th attempt around that 1750 to 1800 mark over the last 3 years. Could take a pause here, but eventually the structure is after so many attempts, it should break out. And if that happens, we could be going slowly and steadily towards the 2000, 2100 mark also over there. And now 1600, 1650 becomes a strong base for HDFC Bank. So a lot of these heavyweights have very strong structural charts. Momentum could be slower, but the trend is still very up.
That's the take coming in some of these interesting names. Want to also check in on some of the buzzers from today. Well, by the way, the market has completely come off and it's, given up all of its gains after hitting that 26K mark. In fact, right now we're lying absolutely flat on the Nifty. So fizzled out immediately after hitting that level as we speak right now. A couple of names though in focus. Tata Power, for instance, Motilal Oswal this morning initiated a buy with the target price of 530. They're talking about as to how the company is undergoing a multi-year structural shift in their business and how the management aims to double the profits by FY27. And that's where they do see quite a fair bit of value. That's of course Tata Power's. There's GMR Power as well. They have clearly a focus on deleveraging and a shift to an asset-light model. That's something that the brokerages have been liking it. Power Grid as well, a successful bidder for establishing an interstate transmission system in Gujarat. So that's the other stock which has been holding out very well. Rajat, the other pocket that I wanted to talk about is the energy and energy transition theme. Where is it that you are finding value, if at all you have exposure to this particular segment?
Yeah, this is a very interesting segment and I think it will do well going forward. But when it comes to value, I bet no one can find any stock with any value, whether it's, renewable, solar or thermal or the old names. Look at some of these stocks, Tata Power you were talking about. It used to be 28 rupees some 4 years back. It's today trading at 430, 40. Same happened with a lot of the PSU companies which were getting into hydro and solar and SJVN and NHPC. I've had this in my portfolio since it was 24, 25, and I had it only because they used to pay about 2 rupees dividend, which is around 10% dividend yield. Look at the way they've moved up, like 100, 120 plus. I think it happens in the market from time to time that, there are certain sectors and themes which become flavor of the month, and somehow everybody starts buying this. Fundamentally, I don't think anything has changed so much for power companies. I, in fact, at one point tried to look at what's going for the power sector because of which these stocks are running up so much. And today also the problem remains, whatever problems they had back in the day. So I really don't know. The only thing I kept reading about was, everything would become EV, electric vehicles. So that's actually dumb to my mind. So look at the valuations, the way they've moved up for this sector. I can almost bet that a lot of these stocks will trade 30, 40, maybe 50% lower to where they are. It's just a matter of time when some correction happens in the market. Extremely overheated sector. I would actually stay away from this. I like power sector. I like energy and power in an emerging economy like India should do very well. Keep an eye on these. You should buy these. You should have these in your portfolio, but not right now.
The portfolio, but maybe not the best time to just do that. In the meantime, just taking stock of some of the buzzers, Ajanta Pharma has moved up, Deepak Fertilizers, Thermax, Vedant Fashions, Polycab. In the last few minutes, there has been traction in some of these names, and they will come up for you on the screen as well. So some of these stocks just perking up in the last few minutes. Was giving up is Triveni Engineering in a big way. If I have it right on my screen, that stock has come up very materially. Granules India too has come off sharply as well, and then of course Concord Biotech has been on the back foot for a while now. Naresh, just wanted a sense from you on Honasa as well as Nykaa. Both of those stocks are under pressure. Anything on the charts that looks like a buying opportunity or looks like a spot where you should book the profits if you have any?
So Honasa saw a big block happen, and it's been facing a lot of resistance around that 520, 540 mark, and would avoid the stock given that the stock has seen a lot of volumes and bulk deals have also happened, but the stock has not broken out, so would avoid. Nykaa, similarly, most of the new age companies have really turned around after giving breakouts. Nykaa has been facing resistance again. It tried to cross about 200, went to 230, but we are back to 200 odd levels, so would avoid here again. The other names in the new age packet still look better.
Kunal, what's the view on a couple of these telecom companies? Because we're just getting news which suggests that the telecom minister, telecom companies and some of the officials are likely to meet today. We don't know the agenda, but one would imagine that AGR is something that might be discussed as well with these officials and the companies. But I mean, there are just 2 or 3 players in the listed space. So what's your take on, let's say, Airtel, Indus Towers, Bharti Hexacom, Bharti Airtel?
So yeah, Bharti Airtel is something which looks attractive. Indus Star also, I think on the more longish term basis, I think looks attractive. The stock which provided a breakout at the 225 plus mark, then moved to I think 450 plus mark very recently, and then from there I think on the back of this recent news flow, the stock had corrected 10% approximately. So yes, I think on a longer term basis, Indus Star is also the one which looks attractive. Now the stock, Vodafone Idea, I think largely that's a stock which I would continue to believe that it's still into a downtrend. We mentioned this a couple of weeks back when the stock had broken below its 200-day moving average. That now there could be a chance that the stock may get back into a downward move on the accelerating side. Now when the news flow started off to be negative for the stock, we saw the pace of correction steepen quite significantly. And even if the bounce back happened for Vodafone Idea in the last couple of days, there was this up move towards I think till 11.25 odd mark for the stock, but that lasted for just about a couple of trading sessions, and then you see the stock coming back into selling pressure, which means that it should take a lot of time for the stock now to form a bottom. The indicators are oversold. Maybe they may not be an immediate correction into the stock price, but more of a time-wise consolidation. But eventually, a drag is what I would expect from Vodafone Idea. Bharti Airtel so far looks to be the strongest from the pack.
Yeah, that's pretty much evident on the way the stocks have been moving. Today, of course, you're seeing profit taking, but Bharti has been practically at an all-time high. Rajat, let's get your thoughts in on Telecom.
Yeah, I have to say that I don't track telecom very closely, and I don't have any of these stocks. But I will give you a small tidbit. I was once talking to a friend of mine who's a competitions lawyer, does monopolies, and I said, I don't see why Jio does not acquire Vodafone when they're making so much investment in telecom and make a foray. Vodafone still has a very large market share, and Jio should acquire them because it does not hit antitrust or monopolies act. Why don't they do that? And he said, look, their service is so bad and they have so much debt on their books that eventually they will not be able to offer what they're offering, and their clients will leave on their own. So most customers will switch to other providers. That's why they're not acquiring them. And personally, I think Vodafone idea is, anyone who's buying this, I have really no idea why they're buying this. There is no reason why a government would want 3 players in telecom sector, as some people have said. But anyways, not right for me to talk about it. I don't track telecom. I don't understand the sector very well.
So that's the view coming in on telecom. Not very sure at least why some of the people are buying. That's the view coming in. But in the meantime, we're also watching out for some of the other quality names which have moved up today. VIP Industries, for instance, is up 4.5%. Remember, overnight we were reading the news flow that Mr. Vijay Keria, marquee investor, has picked up stake in that one. KC International is up 4%. HPCL, ONGC, some of these stocks have been actually doing well. What's the view, Rajat, as far as these oil marketing companies and the entire energy basket is concerned? ONGC, GAIL, HPCL, they've all shot up massively. Do you expect a further re-rating there?
Yeah, no, I think ONGC did correct recently because of oil prices falling. For oil marketing companies, that's great news if oil prices fall. So I think, yeah, that's those are companies which you can continue to hold. ONGC, actually, if you have it in your portfolio, it's a good time to sell some of this, because again, this is one stock which has been one of my favorites. I've been recommending it on your show since about 126, 128 levels. I had a long chat about this with Nikunj as well once. And my reason for buying this was a very high dividend yield. It still has a high dividend yield, but the way it's run up, ONGC is a stock with, remains range bound. So whether it's ONGC, so oil exploration companies, ONGC, in Chennai Petro, and all these companies, right now, not the best time to get into. If you had to, oil marketing like HPCL, BPCL, even GAIL, these are companies which you can consider buying into, because where oil prices are, they will keep posting good results for the next few quarters.
If you like this video, then like, share and subscribe to ET Now.